Wagwan alaikum everyone. Touching your big boy is back and he's back with a bang. So I haven't recorded for like 6 days or so. Yeah. The last video that I did, I was thanking my subscribers. Like I had 38 subscribers when I did the last video. And currently, as you are talking right now, I have 54 subscribers. I want to thank you all for supporting me because that one video, that is the only video that has been able to give me all like that big amount of subscribers. Like to me it's big, even though to other people it might seem a little bit small or something, but to me it's very very big. Yeah, so thank you guys. So I haven't been able to do my recordings, like I took some trades, yeah, but I did not manage to record, yeah, because I had to fix my laptop. I had to buy a new SSD card. As I had told you in some videos back then, I told you that my SSD card was kind of faulty, so I had to buy a new one. But I had to trade. I used my phone to trade and all, but I did not manage to show you guys the trade that I had taken. Yeah. So I fixed my laptop. As you can see right now, I'm using my laptop to record the video. So let me just give you a recap of the trades that I took last week. So I took some trades and we managed to make $511. I don't know if you can see. We managed to make like $511. So we managed to make $511 last week. And let me just give you a fast recap of how I took the trades, what happened, and all. Yeah. So the first trade that I took it on Monday. As you can see, it's on Monday, yeah, around 9:45. During the London session, yeah. I always trade the London session, like that is my window that I always trade in, yeah. So I took this trade, and as you can see over here, the market opened like at this point. We got some little gap, In the previous weeks, we had like big gaps because there were some things going on between US and the Asian countries like Iran and all. But last week we had a very little gap. So the market opened at this point, it came all the way up, and then it started to go down. Like overall, we had like this big bullish trend, a bearish trend. Like we were in a downfall, like the market was just downpouring. The candlesticks were just melting. Yeah, that is in the previous week. But when we opened, like we came all the way to this point. I don't know, we were making some form of higher low or lower high or something. I don't know, but the market came all the way to this point. And as you can see, it did not sweep enough liquidity as we might want it to do. Like it did not sweep enough liquidity. So I did not have, I did not get like these itchy fingers to enter into the market. So I had to wait for some form of inducement to happen so that I can enter into the market. So the market came all the way to this point, and then all the retail traders were enticed to enter into the market when they saw like this big red candlestick. Some entered over here and placed their stop loss like all the way up here, but unfortunately the market went up, swept all the liquidity that is above this highs over here, and then it started to melt downwards. Yeah, so I waited for this inducement to happen so that it can sweep all the liquidity that is above this high. And this high, as you can see, let me just try and get this, like this thing. As you can see, it came over here, came down, came over all the way to this point, and then it went again all the way up here. And as you can see over here, what is wrong with this thing? Okay, as you can see, like we've got this over here, we've got some liquidity above these highs. Like we've got some kind of double top, but as you can see, it came all the way down here, it came up, came down, and then it gave us some kind of double top. And as you all know, whenever we get a double top, then there is some liquidity lying above that double top. Yeah, so I waited for that liquidity to be swept, and then that is when I decided to enter into the market. So I waited for this candlestick to come all the way up here to sweep all the liquidity that is above this double top, and then I waited for it to get some kind of doji candlestick or something. This is not a doji, I don't know. It's a bearish pin bar or something. You know, I don't trade like the candlesticks, the price action mostly, but this is just some form of like a confluence for me to enter into the market. So I waited for this candlestick to come all the way, like it's a bearish pin bar, yeah. And when I saw like it closed around somewhere here, then that is when I decided to enter, because I knew that all the highs, all the liquidity that is above this lower highs over here, then they had already been swept. And I placed my trade somewhere over here, and then I placed my stop loss like above this candlestick that swept liquidity, and then I targeted like all the way below these lows, because I knew this is some form of lower high, yeah. And then we had to create a new lower low, yeah. So I placed my take profit like below this this lower low somewhere over here. I placed it like somewhere over here, and then price just trickled down all the way and it hit our TP. This was like a 1:4 risk to reward ratio. Yeah. One trade, that was a win. The next trade I took it on Tuesday. Yeah. So the market came all the way down here. It gave us our lower our lower low. Yeah. It gave us our lower low like at this point, because we had a break of structure to the downwards. So that means this is our lower low. Yeah. And then, as you know, okay, let me try and tell you which is a valid lower low and which one is not a valid lower low. As you can see, all the candles that went all the way and broke the structure, like they closed below the previous lower low, and that is what makes this lower low valid, because all the candles closed below the lower low. But if, like, let's say like this candlestick would have come all the way down here and then it closed like somewhere over here, then that would not be a lower low, because a valid lower low has all the candles that break the structure to form the lower low have to close below the previous lower low. So if these candles like would come all the way down here and then the price would be rejected and the price would just reverse to like this point, and the candles would close like at this point, and then we just have some sort of wicks down here, then that would not be a lower low. But because these candlesticks closed below the lower low, then that is a valid lower low. Yeah, this here is a valid lower low. We got our lower low, and then price came all the way up here. And when it came up here, we had a break of structure at this point, and this signaled to us this is a break of structure, and at the same time a market structure shift. Like, this signified to us that the market might be reversing all the way and giving us that anytime soon it would be giving us like a bullish trend. Yeah. So the market came all the way up here, and then it started to reverse. You know, whenever price breaks structure, you might anticipate for it to come and retrace, get some fuel or something, so that it can continue going upwards. Yeah. So price came all the way and gave us our next this would be eventually be a higher high. Yeah. The moment we broke this structure and got our market structure shift, then this possibly would be our higher high at this point. Let's say, okay, I've not paid for the trading view plus or something, so that I can do the bar replay, but soon I'm going to do that. Yeah. But for now, let's say we could have been, let's just time travel, like let us just time travel without the bar replay. Let's say we would have been at this point, then this would eventually, like, this could possibly be our higher high. So we'd expect the market to come all the way like to this point and then go up. Yeah. So that is what I anticipated the market to do. You know, like, price just came all the way up here and then down that way. I had marked my sort of order block right here. As you can see, we've got some fair value gap at this point. Okay, let me just squeeze this trade over here. So we had some sort of we had some sort of order block right here. Like, as you can see, we've got this small gap over here. We've got some sort of fair value gap at this point, you know. we had some sort of fair value gap at this point, and then this candlestick led the next candlestick from after this red candlestick. It just gave us a big move to the upside that left an fair value gap for us. And we know whenever a fair value gap is formed and the previous candle, then the previous candle would be an order block. And again, this candlestick over here that led to this big upward movement, it led to a break of structure, signifying to us that this order block is indeed valid. Yeah. So I waited for price to come all the way up here to give, let's say this is our higher high, and then I waited for price to come all the way to this. Let's say at first I wanted it to come to this fair value gap, because price can come all the way to this fair value gap and then just shoot upwards. But I waited for it to come to this. I saw that it just broke past the fair value gap and it touched the order block. And as you can see, the first time price came and touched the order block, it went like price was rejected to the upwards. Again, it came all the way down and then it got rejected again. So that means this is a valid order block, and anytime soon price would just go upwards. But for me, I placed my my trade at this point. Like, I was a little bit aggressive. I did not wait for any confirmation or anything. I just entered into the trade aggressively. Whenever price just touched the order block, then that is when I entered into the trade. Yeah. So I waited for price to come and just touch that. I placed my buy limit at this point, at this order block. So when price just came all the way to this point, it just triggered my buy limit and we entered into a buying trade. Yeah. And I placed my stop loss like below this order block. Yeah. And then I waited for price so price came all the way to this point, and then it did not have sufficient liquidity to push the market to go upwards. And as you can see again over here, we've got some sort of supply zone. So price respected this supply zone. It came all the way to gain more liquidity. As you can see, like, some liquidity was swept below this low over here, and that is when price came, like, price just got enough liquidity and it pumped upwards. So because this was a higher high, and I anticipated for another higher high to be formed, and I came all the way to look at the left. As you can see, we've got some sort of supply zone over here. I placed my take profit just above that supply zone. Yeah, because price could have just come all the way to this point, swept the liquidity above this supply zone, and then that is when it could have come down. Yeah, so I just predicted that price would come all the way to this supply zone, and that is when it could have reversed or something. But as you can see, it did not reverse at this point. It came all the way to like this supply zone over here or something. Yeah, but all in all, this trade was another banger. Yeah, we took another trade which is like a 1:4, 4.34 risk to reward ratio. Yeah, so yeah, that was our second trade in the previous week. And as you can see over here, you always have to check for liquidity sweeps before you enter into the market. For this strategy called the market mechanics strategy, it entails market structure, liquidity, inducements and all, and then we've got like these supply and demand zones, or order blocks, whatever you might call it. Let's say it's just for liquidities, inducements, even though they are almost the same thing, and then we've got supply and demand zones or order blocks, and then we've got market structure. Yeah, so you have to check your market structure first of all to see where the market is going, and then after that you have to check for your point of interest, which is the supply and demand zones, and then you've got to look for some sort of inducements, and then after that inducement has occurred, then that is when you have to look for your liquidity pool. So you have to wait for the liquidity to come and for that liquidity to be swept, and then that is when you can enter into the market. Yeah, so for me, the market came all the way to this point, and then it came and almost touched this fair value gap, and then price like started reversing, and it showed some form of bullish market structure, and that is when some retail traders were induced to enter into the market. This is an inducement. So all the retail traders who let's say entered for a long position over here. Let's say they saw like this doji candlestick or something, and then they decided to enter into the market like somewhere over here. They placed their stop loss below these lows, and as you can see, their stop losses were hit because price came all the way to this point, because this was an inducement. It came all the way down, swept the liquidity, which is it triggered it. Okay, English is not Englishing. It triggered their stop losses, and then that is when the real move happened. Yeah. So all the traders who entered into the market at this point, then their stop losses were hit, and because these stop losses were some form of liquidity that the smart money that the smart money was trying to like form so that it can get enough liquidity for it to go up. Yeah. So for all the retail traders who entered into the market right here, they got stopped out. Yeah. So this trade was so I waited for this liquidity sweep to happen. It swept the liquidity below this lows over here, and then that is when I entered into the market. So the second trade which I took on Tuesday was a win. Yeah. Again around in the evening today, that day I decided to gamble. I felt like a little bit not satisfied with the trade, or maybe I had not reached my daily target or something. I decided to enter into another trade at during the last laps of the New York section. Okay, the New York session. Yeah. So I decided to enter into the market like somewhere over here. I saw like price had come all the way to this point, formed our higher low, and then that is when I decided to enter into the market to let's say to play this move all the way to maybe this previous higher high or something. But unfortunately, as I entered into the market, I saw like this pin bar candlestick being formed or something, and then I I thought that the market was going to go upwards, and I decided to be so conservative on where I placed my stop loss. Like this was just an absolute gamble. I just entered into the market right over here, then placed my stop loss below this nini, below this. Did I just speak in Israeli? Oh my god. Okay, I placed my stop loss below this candlestick that was formed over here, and then price just came all the way up here, and then boom, our stop loss got hit. But I did not lose a lot of money in this trade because I only risked like a very small amount of money. Yeah, because I decided to be so conservative in the on where I place my stop loss. Yeah. So this trade on Tuesday, this was an absolute gamble, of which I recommend never do this because it will really cost you, because I gave out some profits that I had made in the previous trade. So never ever gamble in the trading market. Yeah. So I had on Wednesday, on Thursday, I had a lot of things to do, so I did not manage to trade. I had to go and fix my laptop and all. I had some things that I had needed to do, so I did not take any trades over here. And again, as you can see, the market was just consolidating at this point, so there was not much of a setup in the market here. So I waited till on Friday to take another trade. And again on Friday, we've got this news. Like we've got Friday is is like it's the most volatile day of the trading days. Yeah, like the market will always tend to chop. The market will always be volatile or something, and that is okay. I decided to risk, and I decided to enter into a trade. I decided to not let the week just go that way without me making or reaching my weekly goal of making like $500 in that week. Yeah. So I came and decided to enter into a trade during the New York session. Yeah. And as you know, during the New York session, we've got news, and also I decided to this trade will be a very fast scalp. Yeah. So I saw price came all the way here. It made like our higher high at this point, and it had to retrace. So price just gave us price gave us this very big rejection from this point. Like I think we've got some supply zone at this on the left somewhere over here. Yeah. So price just gave us some big rejection at this point, and some retail traders were enticed to enter into the market at this point whenever they saw this big red candlestick with a big wick. Yeah, so some of them were enticed to enter into the trade somewhere over here. Like they decided to enter into the market over here, and then they placed their stop loss like above this candlestick, and then they placed like their take profit maybe at this point or maybe at this point. Yeah, but unfortunately, because the market was so choppy, like their stop losses were hit because they they decided to place their stop loss at this point, and then as you can see, boom, their stop losses were hit because this was just some form of inducement, and again we've got some liquidity lying above uh, these weeks over here, and price must come all the way and sweep all the liquidity so that it can gain more fuel to go downwards. Yeah, so that liquidity sweep happened. It came and swept all the liquidity above this week's over here, and that is when I decided to enter into the market. Yeah, so I saw like this juicy red candlestick had been formed, and that is when I placed my order at this point. Not an order, it's more of an execution. I executed my trade at this point, and I decided to be so conservative. Is it oh yeah, I decided to be conservative on where I'm going to be placing my take profit. So I placed my take profit at this sort of demand zone that we've got at this point. As you can see, we've got some sort of this demand zone or something. Yeah. So I placed my take profit somewhere over here, and that is when price just melted down. At this point, it almost hit my take profit, and then it started reversing. But because I am a set and forget trader, I cannot close a trade before it either hits my stop loss or take profit. And that is when I waited for price to come all the way down here and hit my take profit. It's either I take it all or I leave it all. You see, there is no closing the trade because we're like a few pips away from our take profit or something. No, I have to milk the market everything that is it's good for me. Like, in this game, it's more of a making our profits bigger than our losses. In trading, this is like a cliche. You'll always lose some trades or something. But to me, the game is more of how much you compound in terms of profits than the losses that you've gotten. So I have to milk the market as much as I can to get that profit, or to compound my profits to be much bigger than my losses. So I cannot close my trade or take partial profits, or let's say, what is this thing called? Like trailing stop loss or something. No, I don't do that. I have to let my winners run high. And that is when I saw like this form of retracement or something. I wasn't faced out, or maybe some people would just see like this some sort of break of structure at this point, and then they would see like the market is reversing or something, and they would just close the trade. But me, I decided to set and forget. It's either we go bigger or we go home. Like that is the saying, go bigger or go home. It's either you take everything or you lose everything. Yeah, so I waited for price to come all the way. I forced the market to come all the way to this point, and that is when took my profits. Yeah, TP was hit. As you can see, this is around 340, 350, and that is when the news would come. So this was just a 1 is to 3.42 or 1. Yeah, it's not a very big trade. Yeah, and that is what you see. This trade, this is the trade that allowed me to reach my weekly goal of making $500 in that week. Yeah, like to me, I have to manage and make $500 during that week, and no more, no less. Yeah, so long as I've just reached that level of $500, then I have to close all the trades, or maybe that is when I can just trail my stop loss. Let's say I had made something like at this point. Let's say at this point I would have made like $500, and my take profit was somewhere over down here. Whenever I see my $500, I don't get greedy or something. I just have to trade my take profit at this point, or that is when I have to close my trade, because I don't let my trades like be make me greedy or something. No, so long as I've hit my weekly goal, then I have to close all the trades. Yeah, so that is how the week ended. Yeah, this trade I took it yesterday around during the evening East African time. Yeah, so that was the weekly recap. That is how I took my trades. Yeah, and we made $511. Yeah, let me see. Yeah, some good old $511. Yeah, $511. So $511 bagged. Yeah. So guys, that is what I did last week, and I have to do some reviews. I'll do the reviews today in the evening. I have to review my weekly trades. Yeah, I have to review my daily. I always journal my trades daily. Like I have to review the trades, see the flows and maybe the advantages that I got in each, on a daily basis. And then I have to go and do some reviewing each and every week. On Saturday, maybe during the evening when I'm free, I have to go and review all these trades to see how I could have adjusted my trades to maybe catch these sniper entries or something, or what I could have improved. So I'll go and review all that during the evening, and during the reviewing, I have to say what I'm grateful for. You know, having like a 99 or 90% win rate during a week is not that easy, because I only lost one trade, and that trade was some sort of gamble. So I have to be grateful for that. And again, I'm so grateful for you guys, because you've made me so happy, because not most YouTubers or maybe beginners in the content creation portfolio always um, reach the 50 subscribers mark. But to me, you guys, you just saw that video and you decided to subscribe to my channel, and I'm so grateful for that, because if it were not for you, right now this channel would have been like only 20 subscribers or something. But you moved all the way from 38 to 54 subscribers in only one video, and I'm really really grateful for that, guys, because I cannot do it without you guys. And as you know, I'm trying to build this sort of trading community, mentor some people. I always see the comments, people telling me to teach them how to trade or something. People outside Kenya, like I don't know which day it was. Some people from Italy, other people from Mexico were just like writing at the comments. You can just go and check the comments. They were telling me to teach them how to trade. And that really motivates me to do these videos more. Like somebody out there is looking at me as their mentor. Like they see me winning these trades, or maybe I lose some, because the main goal of this channel is to be as authentic as possible. So they see that this guy is a little bit authentic, and I can be their mentor or something, and they just decide to ask me to be their mentor. Some of them even DM me on my WhatsApp. Some of my classmates in school ask me to teach them, and I'm really grateful for that. Yeah. So guys, if you really like what I'm doing right now, kindly subscribe, like, share, comment, anything that you want. Just tell me what you'd like me to do in this video. Like maybe this video is not that satisfying, maybe my voice is not a little bit that well or something. Just tell me what I could improve in this YouTube channel, so that I can gain more audience or something. So just comment down there, and we'll see each other in the next video. Yeah, so thank you guys, and remember, you have to do something with your life. It's never too late. Bye bye.